Welcome to another weekly updates from K5 Trading. Please note all the analysis and commentaries are our internal point of view only, and by no means it's a buying or selling recommendation. Today we will discuss the dollar, Aussie, US 30 and US 500. If you have a time, we will discuss the gold as well, but we like to keep our video very short this week as I'm I'm away from my town. Now, before I can go to the provide you my review on the market, I'd like to give you a preview of one of our upcoming tool, which we will be implementing sometime next week or week after. The tool is give us the nearest point of interest, which we call the supply or the demand zone. And it also gives us a breakout and the breakdown from the previous day's highs and lows. So the market, the tool can scan the entire market or as many symbols as we can punch in. It also gives you the last extreme price of the market for all those tools. So this is our tool designed only for the internal use at the moment. We still deliberating how we can release this to the public. Currently, it's only available on, we have developed only in MT4, but soon we will be looking to convert this tool into the MT5 and also TradingView or some other kind of application where we can run multiple markets on this one. So next week, I will be talking more about this tool, and we will start focusing on the midweek update. Somehow try to find some trade setups using the tool, so you know like how we are using this tool. Now with this out of the way, let's go to the Aussie dollar. Aussie dollar, as you know, that's we've been talking for last 3 weeks or 4 weeks, that's we need to see the market coming up to the 60 cents, because our high probability strategy, which is this upper royal, we need a lower royal semaphore because market is actually the moving averages has done some crossover. So this is our internal strategy we use a lot, and at the moment is the prices still haven't got the lower royal semaphore. Last week market did try to rally up a little bit, but marginally break the previous week's high, and so I'm actually looking at another area of interest for me is up here, this fair value gap, and I'm expecting market may actually give me some kind of reaction from here, and then it can come down to the 60 cents level. So this is the area of the interest where I will be shorting the market on the weekly basis, but I need to see the lower time frame like H1 daily time frame and H4 to fine tune my entry area. But this is the zone which I'm looking for some kind of reaction and or some kind of end of the corrective reaction or end of the corrective rally. The revival I'm looking in this one because of this, you can see this big high week up here. That week, just before the fair value gap, means there were lots of price efficiency here, lots of buying and selling happening this week, and there must be some pending orders above this area and some stop losses. The people who have short this market, their stop losses are here. So that's why this area is very, very interesting for me, and I'm expecting market to at least sweep the liquidity above this above this candle, which is I think which week is it? It's the start of this month, so it's a start of the October candle, which was with the big high week. Lots of liquidity, and expecting market to sweep it before it can come down to the 60 zone. That's why I'm actually watching and monitoring this area. Let's quickly have a look into the daily time frame. The daily time frame, this is what market this, and this is what I'm expecting in this zone as well. So market took out the liquidity of all those, sweep the liquidity of all those wicks area. All this price efficiency where we have a lots of pending orders or stop losses or whatever you can call it, but there was some liquidity here, and that liquidity swept out just yesterday, last day of the week, and market closed on the positive note, but it still failed to break the previous month's low. I think it's the previous month or previous week's high, I think. Yeah, it's a back 2 weeks high. It still failed to break this high up here, or just slightly create a kind of a double top. So I'm expecting a bullish reaction to the market, but out of this bullish reaction, I'm looking prices to give me some kind of entry around 65 and 66 zone, and then I'm looking for a short trade from there on. That's my analysis on the Aussie dollar. Let's see the euro, how the euro is doing. On the weekly time frame, I can see euro failed to break the previous weeks or the previous month's low. That's previous month's low. That's your previous month low, and market actually failed to make this previous month low. It did try for last 2 weeks. It did try to rally up, but failed to rally failed to break the previous month high and come down. So it's a kind of a consolidation market right now. It's not a trending for last 1 month. So I'm expecting market to be in the trending mode, the consolidation mode for some time before it can break up or break down. Right now, the overall view of the market is bearish, but we're not discounting any bullish correction just yet, because I can see some liquidity above this area, and market needs to sweep the liquidity before it can come down. This is how market always react. Right, so after this weekly updates on the Euro USD, let's try to see on the daily time frame. The daily time frame, I don't see this. This is a valid trend line, and this is the entire market correction is just simply trying to build a liquidity here, try to trap the user here or the retail traders so they can buy, or they can have some liquidity here. Once they have the sufficient liquidity, they will actually sweep those liquidity first at the downside, or first at the upside and then downside, and break the previous month's low. So currently expecting market to be in the sideways roll from the swing point of view. If you want to do trading the swing point of view, then you should actually go and look into the lower time frame, which is H1, M15 and M5. So after the Euro USD, now we have a look into the US 30. US 30 is a little bit promising. It did try to rally up the market, even though it is still a corrective rally. For last 3 weeks, it is in the closing in the positive notes. However, during this process of the positive closing, it did build up a lots of liquidity, like the 2 weeks back, the last week, 2 weeks back, and then this week was the price quite efficient, so it's actually moved upside. If the next week or coming week, market start from the opening of the closing prices and continue upwards, then I can see some fair value gap, and that fair value gap will be filled up in coming weeks. Right now at this stage, what I can see some liquidity here. That's the zone up here, which I can see the liquidity, and hoping that market will try to come up in this zone and give us some kind of reaction. This is also, if you look at our point of interest as well, even though it's not that significant, but still it's a point of interest. So this is the area I can see. It's already swept a little bit in this area, but that's my fair value gap. And after that fair value gap, I got my point of interest is this one. Okay, so I'm expecting market to try to tap into this zone and then give us the thumb down. This is also a kind of an inducement. So inducement means that market will actually try to grab this liquidity and then fall again. And if it's break above, then we can see some kind of notes to the upside. But at the moment, it is a zone of interest, and we are looking for market to do some kind of price rejection in this area. So that was the US 30 from the weekly point of view. On the daily point of view, I don't see anything different than what I talked on the weekly time frame. If you can see some fair value gap, which I was talking on the weekly time frame, it is here, and the same bar is my block, and this is where I'm expecting market to actually come touch and give you some kind of reaction. At the moment, it is still heading that way, so expecting a higher move before market can come down and sweep this liquidity area. All right, so guys, that was the US 30. Now let's try US 500. US 500 on the weekly time frame is a little bit different pattern this time than the US 30. You can see last week it's make the low, and this week's it's tried to break the previous previous month's high, but so far it's failed. I can see lots of liquidity being built up here, and I can also see this fair value gap has been filled. Now, with this fair value gap has been filled, we need to find our point of interest, which is coming somewhere around 3950 area, or it can come up here, and then it can come up to the 4280 area. So these are the two zones which I'm looking for market to reach in the reactionary mode, and then try to come down if it's failed to break this previous peak high. Oh, sorry, this swing high. From the daily point of view, I can see a trend line break, and that the lots of liquidity below the trend line. I'm expecting market to actually come down, sweep the and go and just rally up in this zone between those moving averages and make an upper yellow semaphore. That will be my analysis for the US 500. Guys, that's all I have for you this week. I will make another video for the Ethereum and the Bitcoin, and also I will make another video for the Nifty 500 Nifty if you're following Indian market. But from the forex and the commodities point of view, that's all I got to offer this week. Next week we will try to bring our scanner a little bit more in the spotlight and try to find some trade setup from those scanner. Starting from the November, we will also start trying to pick up some trade setups which the scanner alert to us, and we will try to make those videos. That's all I got for this week. Happy trading, and thanks for the watching.